There are three things that caught my attention this week. The first is something that has not changed in over 15 years. And this is pretty important because retirees, people who want to retire strong, they haven't necessarily been able to because of this one thing their advisor or what they have been taught. And that could be changing. There's a big change possibly underway, and we have to talk about it. The second thing is I want to talk about layoffs because it makes a difference where the layoff is happening. There are two tech giants and layoffs are hitting their stock price very differently. So we want to talk about that difference. And then the third is gold. It's been quiet for years. It had its major peak back in 2011 and then two more peaks after that, but it really never got going. So we're going to touch on gold too. Stick around. We're going to get to those, and who knows? We'll see where else my attention goes, but we'll get to that. Okay. Hey everybody, RC Peck here with Fearless Wealth, and this weekly video is a place where I can show retirees and people who want to retire strong what is going on in the market. Because here's the bottom line, and no one talks about this. Whatever a retiree's goal is, whatever their vision board is, whatever their dreams are, if they want to spend time with their grandkids, whatever those wants are for the last third of their life, almost everything comes down to the size of their portfolio, right? How their portfolio grows in those very long periods, those good years, and they are a lot of them. But even more importantly, how they protect their downside when the market falls, right? No one, period, but certainly no one in their 60s, 70s, or 80s wants to lose 40, 50, or 60%. So this is where I look at the market for the week, and I look at what is impacting retirees and the ability to retire strong most. So got three things. Let's go over them. I'm going to jump over to the price charts so we can start looking at them. So here's the first price chart I just want to show you. It is what's called a relative price chart. If that black line is falling, and it has been for over 15 years, that means you did not want to have any of your money exposed to the international stock market. So if you live in the US, international is basically everything else that's not US. Now here's the problem. Every advisor, and I mean almost every advisor, says to their client, you got to have an allocation to the international market, right? Now, they've never done this study. They don't actually know that's actually a mistake. But here's a great example. For 15 years, that allocation to international markets greatly hurt that retiree's portfolio. So if this line is falling, and it is, that means international has underperformed US domestic. Now, if you look to the lower right corner of that price chart, you can see that price poking out of that pretty phenomenal downtrend. Now, this may be the start where international stocks outperform US domestic stocks. And when they do, when that baton is fully handed from US domestic to international, it can last 5, 6, 10 years. And it's really important to the stability of a portfolio. So I wanted to point that out, that it is actually moving up for the first time and breaking out of that downtrend. So it has caught my attention. Now, has it fully happened? We don't know yet. We do know it bottomed with a triple bottom, which is pretty important. So the one symbol is EFA, which is basically an international symbol. EFA, Europe, Far East, Australia. Think of it as an international. And the denominator in this price chart is the S&P 500 with dividends reinvested, or SPY. So that's a pretty big deal. Even Vanguard says you should have 40% of your equities exposed to international. That means, from Vanguard's mouth to your ears, they wanted you to greatly underperform for the last 15 years. Now, let me actually show you what this looks like in a slightly different price chart. So let's put in international and let's put in US domestic. And let me just show you what I mean, what Vanguard wanted you to do for the last 15 years. So here's the 15-year-ish, something right around there. Vanguard said, hey, put 40% of your equity money in or on the red line. Huge, huge, huge mistake. The Blue line, which is US domestic, greatly crushed. US domestic, even with the correction, is up about 275% over that 15-year period, where international is up about 40%. You can do the math. It's about 7 times worse, or 1/7 the gain. So that's the first thing I want to show. I'm going to keep a watch on this to see if it really is a full kind of handoff baton to international. And if it is, that puts more of a weighting that maybe the full fall is over. I still think the market has more to go, but it'll be evidence in the sign that bullish things to come, because typically the baton getting handed from international to domestic or domestic to international happens after a major correction. Think global financial crisis, 58% down in the market, or the .com, 50% down in the S&P, 83% down in the NASDAQ 100. Wow, that was a big hit. Okay, that was the first thing I want to show you. Let's get to the second thing. Yesterday, I'm recording this Thursday market hours. Yesterday, Microsoft came out and said, we're letting go basically 5% of our work staff. Now, Microsoft has about 200,000 employees. Holy cow. And they're going to let go about 10,000. So not that big a number. The point, and what I want to point out to you, is not the number, but what the announcement has done for Microsoft. So if you look at this price chart, Microsoft, from the peak of it peaked in 2021. First of all, it had a triple top, if you see that right here. It tried to get above that kind of that 340 mark. It couldn't. 3 failures. From that, it fell about 38%, and it's stabilizing right now. But the news coming out saying that Microsoft is going to fire 10,000 employees, or about 5%, is not helping its stock price. Okay, let's talk about Meta. When Meta said the same thing, or when Mark Zuckerberg came out and said, we're going to fire same amount, all right, about 11,000 employees. Now, I did not look to see how many employees Meta has, but they have a lot. How's that for a technical term? What I do want to point out is when that announcement happened, when that piece of news hit the market, Meta went up. And in fact, since that announcement, Meta's up about 40%. So this is really important for really retirees and who's advising them and who's managing their money. It's not just news, right? News is just information. Right? By itself, it cannot help. You have to actually understand, your advisor has to understand how it impacts your portfolio. And sadly, most do not. Same news, right? 10,000 people being fired from each company. They're both in the tech industry. Let's just call it that. Very, very, very different outcomes. So you have to look at price and understand price to know when news is good news and when it is bad news. Right now, for Microsoft, it's bad news. When the news came out with Meta back in November, beginning of November, that was good news for its price. Okay, and the last thing I want to look at is gold. Now, I'm starting to talk about gold more. I started studying gold about 25 years ago. Yes, I was in my 20s then. Gold has really frustrated people. If you look at the screen here, you can see in 2020, gold hit a high of $2,040. Then it attempted to break above that high in 2022, but it didn't. That red line is the high from 2011. And it's there right now. Now I'm looking at gold, the index. This gold price chart is priced in US dollars, but it's right at kind of the scene of the crime from 2011. And people remember that price from 2011. Even as you look at this price chart, which is a 3.5-year time range, you can kind of see, if gold can stay above that 2011 high, which was about $1,911, maybe intraday it hit $1,921. But even just for easy math, call it $1,900. If it can stay above that price, and the people that wanted to give their ounces or shares back when it went above 1900, if it can absorb what's called that supply, or people supplying the market with those ounces of gold or those shares, if you're looking at like an ETF like GLD, then the next major upside is going to be $3,000. The bigger news is what happens to mining stocks if that happens. So I'm watching this. Gold is not a place you should always be. A lot of retirees are taught that gold is a hedge. No, an asset is never a hedge. The strategy that has you own or don't own an asset is the hedge. I want you to hear that. The investment approach, that's the hedge. You want to have downside protection. That's a strategy. You want to make sure you have full market growth with no cap. That's a strategy. You want gold when it's doing well. You have to know when it's doing well. So that's what I see going on this week. Of course, when things change, and lots of things are changing, the Fed is raising rates. I think they're only going to raise them to 5%, maybe 5.25%. But holy cow, crazy things are happening in Japan right now. They are basically losing control of their yield curve. Just last Thursday and Friday, they spent $70 billion trying to hold down the interest rates. Now, Japan's economy is a lot smaller than the US's, and the fact that they spent $70 billion in 2 days, that's a huge number. Japan's about, I think, $5 trillion market size. US is about 20. So that's like the US spending $300 billion in 2 days, which I know billions and trillions, it doesn't make sense to the brain, but it is a huge number. So let's kind of put a bow on this. Markets are moving. The overall market itself is still trending down. Europe International is looking much better. I'll keep an eye on that. So when you do look to allocate or reallocate, what parts of the globe are doing well matters a lot. What matters even more than that is whether you should even be in the stock market or not. Thanks everyone for being in my world. I appreciate you watching, subscribing, liking, making a comment because it helps. If you think I missed something or there's a part of the market you'd love for me to look at, leave it in the comments and I'll get to that. Okay, thanks so much, and I will see you back here next week. Okay, bye.